Berjaya Corporation Berhad is one of Malaysia's leading diversified conglomerates, established through the acquisition of Berjaya Kawat Berhad by Vincent Tan Chi Yon in 1984. The company assumed its current listing status on Bursa Malaysia in 2006 after a series of restructuring exercises. Today, Berjaya Corporation Berhad operates across diverse industries including retail, property, hospitality, financial services, food and beverage, gaming, environmental services, automotive, and telecommunications. With a strong presence in Malaysia and overseas, the group focuses on sustainable growth, innovation, and value creation while integrating ESG and CSR practices into its business operations.
Next, I will present the analysis of support and resistance for Berjaya Corporation Berhad. This concept is important because it highlights the price level where buyers and sellers are most active, guiding us in making informed trading decisions. For the first one, we have the support. The key support zone is between 0.235 and 0.238 ringgit. This is the area where buyers repeatedly enter the market and prevent the further decline. Each rebound from this level shows strong demand, meaning the price is unlikely to fall below it easily. As long as the price stays above this support, the short-term outlook remains positive. The next one is resistance. Resistance is where selling pressure builds and limit upward movement. The nearest resistance is around 0.25 to 0.248. which the stock is generally trading. Beyond that, stronger resistance zones appear at 0.26 to 0.65 ringgit, and then 0.288 to 0.292, and lastly 0.30 to 0.304. This level has historically triggered profit taking, so they act as barrier unless strong buying volume pushes through. And for the buying and selling, buying opportunities are the most attractive near the support zone at 0.235 to 0.238, marked by the green-yellow. This area offers a favorable risk-to-reward ratio and has shown consistent accumulations. Selling or profit-taking is recommended around 0.26 to 0.265. shown by the red arrow. If the price breaks above this level, higher profit targets at 0.288 to 0.292 and 0.30 to 0.304 become realistic. At the current price of 0.45, the stock is trading near its immediate resistance. Since it has already moved away from its strongest support, the best strategy now is to hold and monitor. Shareholders should continue holding as long as the price remains above 0.235 to 0.238. New investors may wait for either a confirmed breakout above 0.248 or a pullback toward the support zone for a safer entry. In conclusion, support and resistance are key levels that reflect market behavior. For Berjaya Corporation Berhad, the strategy is clear where buy near support, sell near resistance, and hold cautiously in between. This disciplined approach helps maximize gain while minimizing risk, making it a practical guide for trading decisions.
Next is Bollinger Band. First is buying signals. Multiple buying signals were identified across the chart, marked by the green upward arrows between September and October 2025. 4 consecutive buying signals appeared as the price repeatedly touched the lower Bollinger Bands at around RM 0.265 to 0.275, each followed by a healthy bounce that eventually drove the price toward RM 0.300. A first signal emerged in November 2025 during the mid-trend pullback, where the price returned to the lower band before resuming into upwards movement. During the February to March 2026 period, another buying signal appeared within the second squeeze consolidation zone, offering the short-term bounce opportunity around RM 0.265 to 0.270. However, From April 2026 upward, the buying signals become progressively less reliable as the stock entered a confirmed downtrend. The signal in April, May and June 2026 occurred near or below the lower band at approximately RM 0.230 to 0.245. And while they indicate oversold conditions, acting on them in a declining trend carries significant risk of further losses. The second one is selling signal. Throughout the chart period, three selling signals were identified. Marked by the red downward arrow, the first selling signal appeared in October 2025 when the price touched and closed near the upper Bollinger Bands at approximately RM 0.295 to 0.300, indicating that the stock was overbought and due for a reversal. The second selling signal occurred in early December 2025 following first squeeze, where price briefly broke upward but was immediately rejected at the upper band, confirming a failed breakout before falling sharply. The third and the most notable selling signal appeared in early May 2026, shortly after third squeeze, where price spiked aggressively to approximately RM 0.285 to 0.290 before reversing violently downward, a classic bull thread pattern. In all three instances, the price touching or reaching the upper band signal overbought conditions, and the subsequent reversals confirming strong selling pressure at those levels. Next, I'll explain about squeeze. Three Bollinger Band squeeze events were identified on the chart, each marked by a highlighted box. The first squeeze occurred between late November and early December 2025, where the bands converged tightly around RM 0.270 to 0.290 range. The breakout from this squeeze appeared bullish initially but quickly reversed to the downside, resolving bearishly. The second squeeze, spinning from February to April 2026, was the most prolonged and significant, with the band remaining extremely narrow for nearly 2 months during sideways consolidation around RM 0.265 to 0.275. When the price finally broke out of this squeeze, it did so aggressively to the downside, confirming a major bearish structural shift. The longer squeeze duration, the more powerful the subsequent breakout tend to be. The third squeeze formed in late April to May 2026 after the preceding decline. Although price initially spiked upward out of this squeeze toward RM 0.290, it reversed sharply and immediately confirming a false breakout. 2 out of 3 squeezes resolved bearishly, reinforcing the overall downward bias in the stock. Next, we'll go for a final decision. Based on the Bollinger Band analysis, the current market price of RM 0.245 is not suitable for a buy entry at this time. The price is currently trading below the 20 days SMA of RM 0.246, which confirms that the short-term trend remains bearish and the sellers are in control. Although the price is approaching the lower band at RM 0.234, suggesting the stock is nearing oversold territory, this alone is insufficient justification to buy in a confirmed downtrend. The three squeeze events observed throughout the chart period resolved bearishly in 2 out of 3 cases, and the most recent selling signal in May 2026 led a significant price decline of approximately 15% from RM 0.290 to a current level. Buying at this stage risks entering too early before any genuine reversal is confirmed. A more prudent approach would be to wait until the price closes convincingly above the SMA at RM 0.246 with the strong supporting volume, or until a squeeze form and break out to the upside before considering any buy position in Berjaya Corporation.
Let's move to simple moving average.
For buy signal, as shown on the chart, BG Crude experienced a strong upward movement in the middle of 2024. The share price increased significantly around RM0.28 to RM0.43. This crossover is considered a bullish signal because it indicates that buying momentum is stronger than selling pressure. Several buy signals appear during this uptrend, attracting more investors to the market. Although the share price later declined, it is now trading near a support level between RM0.24 and RM0.25. This support area may provide an opportunity for the price to recover if buying interest increase again. Next, let's look at the sell signal. After reaching its higher price of approximately RM0.43, PG Crop entered a prolonged downtrend. The stock continued to from lower high and lower low, which is a common sign of a bearish market. During this decline, the share price fell. This generated multiple sell signals and indicate that market sentiment had become weaker. As selling pressure continued, investors who bought the stock near its peak would likely have experienced significant losses. For decision, based on S&P analysis, the recommended decision is to hold to buy rather than buy immediately. The latest closing price of around RM0.253, indicating that the bearish trend is still dominant despite signs of stabilization near the RM0.24 to RM0.25 support level. In conclusion, while BG Crop previously showed a strong bullish trend followed by a sustained bearish pace, this is currently insufficient evidence to confirm a recovery. Therefore, investors should monitor the stock closely and wait for a clear bullish signal, such as a break above both moving average with strong volume before considering a buy.
Next, I will explain the Relative Strength Index or RSI analysis for Berjaya Corporation Berhad. The RSI is a momentum indicator that measures the strength of a stock price movement on a scale of 0 to 100. An RSI above 70 indicates the stock is overbought, while an RSI below 30 indicates it is oversold. Looking back at the chart, the RSI moved above 70 in mid-April, showing strong buying momentum. However, it quickly fell back below 70 and crossed under its moving average, signaling that buying pressure had weakened. As a result, the share price started to decline. On the other hand, in late March and early April, the RSI dropped below 30, indicating that selling pressure had become excessive. When the RSI crossed back above 30 and its moving average, it generated a bullish signal, and the stock price rebound from around 0.235 to 0.290. Currently, the RSI is 47.1, which is in the natural zone. This means the stock is neither overbought nor oversold, so there is no strong buy or sell signal at the moment. For conservative investors, it's better to wait for the price to break above the 0.25 resistance level with strong trading volume before entering the market. For aggressive investors, the current price around 0.245 may be a good accumulation opportunity, provided they place a stop loss below 0.23 to manage risk. In conclusion, the RSI shows that Berjaya Corporation is currently at a mature stage, so investors should wait for stronger confirmation before making any major investment decision. Thank you.
Next, I will present the Moving Average Convergent Divergence, or known as MACD, analysis for Berjaya Corporation Berhad. The MACD is a technical indicator used to identify trend direction, momentum, and potential buy or sell signals through the relationship between the MACD line and the signal line. First, The overbought signals appeared in October to December 2025 and March to April 2026. This indicated strong bullish momentum, but as buying pressure became excessive, investors took profits, causing momentum to weaken and the share price to decline. Next, the oversold signals occurred in December 2025, January, April, and June 2026. This suggested excessive selling pressure, after which buyers gradually re-entered the market, leading to short-term price recoveries. Based on the MACD analysis, the recommended strategy is hold to buy within the 0.235 ringgit to 0.245 price range. Currently, the MACD line is moving closer to the signal line, indicating that selling pressure is easing and momentum is beginning to improve. Although a bullish crossover has not yet been confirmed, investors may consider holding their existing position while monitoring for a confirmed crossover. Once the bullish crossover occurs, it would provide a stronger signal to buy the stock.